Hold on to your hats, folks, because Donald J. Trump is back in the White House. Yes, you heard that right. The man who shook up the political landscape and left an indelible mark on the economy is making a grand return. Love him or hate him, one thing's for sure. Trump's presidency is going to be a wild ride for the stock market. His policies have always been a roller coaster, and this time it's no different. Remember those massive tax cuts in his first term? The deregulation frenzy? Those moves sent shockwaves through the financial world, creating both opportunities and challenges for investors. Yeah, get ready for round two. With Trump back in the Oval Office, we can expect more of the same aggressive economic policies aimed at stimulating growth and boosting market confidence. Trump's a businessman through and through. His approach to governance is heavily influenced by his business acumen, and he's always looking for ways to cut deals that benefit the economy. He knows how to make a deal, and he's obsessed with winning. This means he'll be relentless in his pursuit of policies that he believes will drive economic success. That means he'll be laser-focused on boosting the economy and sending the stock market soaring. His administration will likely prioritize tax cuts, deregulation, and pro-business policies. He wants to see those Dow Jones numbers hit record highs, and he'll use every trick in the book to make it happen. From tax incentives to trade deals, expect a full-court press to push the market upwards. Of course, not everyone's thrilled about Trump's return. The Democrats are fuming and they're gearing up for a fierce battle over his policies. The media's in meltdown mode, with pundits and analysts dissecting every move he makes and predicting all sorts of outcomes. And the experts are predicting doom and gloom. Many are concerned about the long-term impacts of his policies on the economy and the potential for increased volatility. But hey, that's just noise. For those of us in the market, it's all about finding the opportunities amidst the chaos. We're here to make money, right? And under Trump, there's going to be plenty of money to be made. His policies, while controversial, often create lucrative opportunities for savvy investors. So, whether you're a seasoned trader or a newcomer to the market, now's the time to pay attention. The landscape is shifting, and those who can navigate the changes stand to gain the most. So buckle up, Buttercup, because we're in for a bumpy but exhilarating ride. The next 4 years are going to be a test of resilience, strategy, and nerve. Stay sharp, stay informed, and get ready to seize the opportunities that come your way. As we move forward, keep an eye on key policy announcements and market reactions. Trump's decisions will likely have immediate and significant impacts on market trends. His supporters believe in his vision for a stronger economy, and their confidence can drive market sentiment. But be prepared for the unexpected, as his presidency is anything but predictable. Stay tuned to financial news and updates, as the market will be highly reactive to any new developments. Flexibility and quick decision-making will be crucial in this dynamic environment. The late nights and early mornings will be worth it for those who can stay ahead of the curve. The market is a living, breathing entity, and under Trump's leadership, it will be more alive than ever. So, here's to the thrill of the chase, the excitement of the unknown, and the potential for great rewards. Buckle up, Wall Street, because the Trump era is back, and it's going to be one heck of a ride. Listen up, because this is important. Election years are notoriously volatile for the stock market. It's like a roller coaster ride with sudden drops, unexpected turns, and moments that take your breath away. Why? Because uncertainty reigns supreme. Investors get jittery, not knowing who's going to be calling the shots in the Oval Office. Historically, the stock market tends to underperform in the months leading up to a presidential election. The political rhetoric heats up, the attack ads flood the airwaves, and investors start sweating bullets. They pull back, waiting to see which way the wind will blow. But here's the kicker. Once the election is over, the market usually rebounds. Why? Because uncertainty gives way to clarity. Businesses can finally plan for the future, investors regain their confidence, and the money starts flowing back into the market. Now, let's talk 2025. This year is not just another tick on the calendar. It's a pivotal moment for investors, a year that could redefine financial landscapes. The anticipation is palpable, and the stakes are higher than ever. That's the year I'm putting my money where my mouth is. It's not just about making a bet, it's about making a calculated, informed decision based on patterns, trends, and a deep understanding of market dynamics. This is the year where preparation meets opportunity. I'm predicting a massive Trump bump in the stock market. This isn't a wild guess. It's a forecast grounded in historical data and current economic indicators. The signs are all there, pointing towards a significant upward trajectory. Why am I so bullish? Because I've seen this movie before. History has a way of repeating itself, especially in the financial world. The patterns are clear, and the indicators are strong. It's like watching a rerun of a favorite show, where you already know the ending. Remember what happened after Trump's 2016 victory? The market went bonkers. The Dow Jones soared, breaking records and setting new benchmarks. It was a time of unprecedented growth and optimism. The S&P 500 hit record highs, reaching levels that many thought were unattainable. It was a period of exuberance and confidence, where the market seemed unstoppable. And investors were popping champagne like it was 1999. The celebrations were not just about the numbers, they were about the belief in a brighter economic future, driven by policies that favored growth and innovation. Call it the Trump effect, call it whatever you want, but the man knows how to move markets. His policies, his rhetoric, his very presence have a tangible impact on investor sentiment and market performance. Sure, there will be naysayers, there always are. Skepticism is a natural part of the financial ecosystem, and it's healthy to have differing opinions. It keeps the market balanced and prevents irrational exuberance. They'll tell you the market's overvalued, that the numbers don't add up, and that we're heading for a correction. These voices are important, but they often miss the bigger picture, that a crash is inevitable, that the bubble will burst, and that we're on the brink of a financial disaster. These warnings are not new. They've been around for as long as the market itself. That Trump's going to ruin everything. Critics will always find something to point at, some flaw to highlight, some reason to doubt. But history has shown that markets have a way of defying the naysayers. Don't listen to them. They're just chicken littles who are too scared to make real money. Fear is a powerful emotion, but it can also be paralyzing. The key is to stay informed, stay confident, and stay the course. 2025 is going to be huge. The potential for growth is immense, and the opportunities are endless. It's a year that could redefine what we know about market dynamics and investment strategies. Trump's going to be firing on all cylinders, pushing his pro-business agenda, implementing policies that favor growth, innovation, and entrepreneurship. His focus will be on creating an environment where businesses can thrive and unleashing the full power of the American economy. From manufacturing to technology, every sector stands to benefit from a renewed focus on economic growth and stability. Get ready for a stock market boom the likes of which we haven't seen in decades. The stage is set, the players are ready, and the future looks incredibly bright. This is not just a prediction, it's a vision of what's possible when the right conditions align. Now, I'm not saying you should go out and bet the farm on the stock market. Investing is a complex game, and it requires a well-thought-out strategy. You can't just throw your money at the first stock that catches your eye and hope for the best. It's about understanding the market, knowing your risk tolerance, and making informed decisions. Investing is always a risk, and you need to be smart about it. This means doing your homework, researching potential investments, and understanding the factors that can influence market movements. It's not just about picking winners, it's about managing risk and ensuring that your portfolio can withstand the ups and downs of the market. But if you're sitting on the sidelines too scared to get in the game, you're going to miss out on some serious profits. Fear can be paralyzing, but it's important to remember that every investment carries some level of risk. The key is to balance that risk with potential rewards and to make decisions based on logic rather than emotion. So, what's the key to investing wisely in these uncertain times? Simple diversification. Diversification is the practice of spreading your investments across different asset classes, sectors, and geographies to reduce risk. By not putting all your eggs in one basket, you can protect yourself from significant losses if one investment performs poorly. Don't put all your eggs in one basket. This age-old advice is particularly relevant in today's volatile market. By diversifying your portfolio, you can ensure that you're not overly exposed to any single investment. This way, if one sector takes a hit, your other investments can help cushion the blow. Spread your bets around, invest in different sectors, and don't be afraid to take some calculated risks. This means looking beyond traditional stocks and bonds and considering other asset classes like real estate, commodities, or even alternative investments like cryptocurrencies. Each of these can offer unique opportunities and help you build a more resilient portfolio. And here's another tip: don't panic. Market volatility is a fact of life, and it's something every investor has to deal with. The market's going to go up, it's going to go down, it's going to make you want to pull your hair out. But reacting emotionally to market fluctuations can lead to poor decision-making and potentially significant losses. The market's going to go up, it's going to go down, it's going to make you want to pull your hair out. But if you keep your cool, stay the course, and stick to your investment strategy, you'll come out ahead in the long run. It's important to have a long-term perspective and to remember that short-term volatility is just part of the journey. But if you keep your cool, stay the course, and stick to your investment strategy, you'll come out ahead in the long run. This means having a well-defined investment plan and sticking to it, even when the market gets rough. It's about being disciplined and not letting short-term noise distract you from your long-term goals. Remember, investing is a marathon, not a sprint. It's about building wealth over time, not getting rich quick. This requires patience, discipline, and a willingness to stay the course, even when things get tough. By focusing on your long-term goals and not getting caught up in short-term market movements, you can build a more secure financial future. So pace yourself, stay informed, and don't let the noise of the market drown out your common sense. Keep learning, stay updated on market trends, and don't be afraid to seek advice from financial professionals. By staying informed and making smart, informed decisions, you can navigate the uncertainties of the market and achieve your investment goals.